welcome to On the Table as we're coming to you outside of our regular bulletin, Malaysia Tonight. I'm your host, Otto Othman. Now, with all new RTM ASEAN blog, we're broadcasting on RTM Click and MyTV's Berita RTM channel, which is also live streaming on YouTube. Now, for tonight's episode, in the next 30 minutes, we'll be discussing Malaysia's projected economic growth of 5.8% in the second quarter of the year, 2Q 2024. And we welcome back to the studio renowned economist Dr. Shankaran Nambiar, who's currently in the studio. Thank you very much, Doctor, for coming to the studio.
It's a pleasure to be on your show.
Now, firstly, we'd like to talk about key drivers behind Malaysia's projected economic growth. So can you please tell us a bit about that?
I think most sectors have contributed to growth. I mean, it's been fairly remarkable. Manufacturing has done well, so has mining, and agriculture hasn't done as well. Services has done extremely well. Agriculture as a whole hasn't done terribly well, but there have been pockets within agriculture that have contributed to the rise in GDP, particularly fresh palm oil, oil palm fruits. So you find that there has been an all-round contribution from all these sectors, particularly services, and as I said, manufacturing, have contributed. And if you also looked at expenditure, you find that households have done well. They have consumed. There has been vibrant consumption from the household sector. Government consumption has been, government expenditure has been good. And perhaps gross capital formation, which is investment, has also been vibrant. Perhaps the only area where which hasn't been as positive has been net exports. And even that, I think there's a huge silver lining to it, because the net exports, which is the difference between exports and imports, that used to be in fairly negative territory, and that difference, the range of the shortfall has been reduced, meaning that exports has risen fast enough to close the gap between exports and imports.
Wow.
So if you looked at it from all sides, you find that the second quarter has been pretty good. Now, let me remind you that first quarter growth was 4.2%.
Okay.
Right? So this quarter, if you have 5.8,
yep,
that comes to 10%, which averages out to first half giving you something like 5% growth rate. And that's wonderful, because if you can keep that momentum, you could easily expect to get another 5% for the second half of 2024, which means very comfortably we would have achieved the target that has been set. I mean, it's not really a target, the projected growth rate that Bank Negara has come out with. My own guess, and this is something that I've mentioned earlier on in my interaction with media, that the second half is likely to be better than the first half.
Yeah.
We'll come to the reasons a little later.
We did talk about this earlier on with regards to the main key drivers of the economy, like what you just mentioned, manufacturing, oil and gas. What about other sectors that might contribute? Is that also contributing to the growth rate in our economy, in GDP?
Yes, I would see the big contributors or the big contributions coming from E&E, palm oil, of course, to a lesser extent, though it definitely would contribute. Tourism would be another area in which you would see some contributions coming out. And of course, trade, wholesale and retail trade, I see that as being a vibrant sector. Given the consumption patterns, household consumption, that has been boosting the economy quite a bit. It's a very domestic-driven economy. So given that, I would expect consumption also to be trade, wholesale and retail trade also contributing to GDP growth.
How does this growth forecast compare to Malaysia's historic economic performance and the average growth rate in the region?
Okay, I'll look at these two slightly separately. First, looking at historical patterns. I think if we keep up this 5% thing and we achieve, I mean, 5.8 is pretty good, but talking about 5% for the whole year, I think would put us in the kind of growth rates we were experiencing in, let's say, 2017 or so, I mean, which means we are getting back to the pre-COVID growth rates.
Which is a good sign.
Which is a very good sign, because I think 2018 we were going a bit soft, and then COVID came, and then it got into negative territory. So from a historical perspective, it's been good. I think also, if you're looking at it as compared to 2023, pretty good, because at the first quarter of 2023, I think growth rates were something like 5.5%, and then it tapered down. Fourth quarter, it was, I think, 2.9%. So whether you're taking a longer view, the last 5 years or so, or you're taking your basis of comparison is last year, whatever your basis for comparison, I think we're doing pretty well.
Pretty well. Thank you very much, Doctor. Now, which sector of the Malaysian economy are expected to be the main contributors that you think, Doctor, in this strong growth projection?
E&E, definitely.
E&E.
I think that there's a great initiative. The government is taking efforts to encourage us to get into, I would term it as the two wings, digitization and ESG. So all those alternative energy, climate change related kind of stuff, going green, etc., that would be one area. And I think that's in keeping with global trends. So I think there will be a big push to invest in these areas, as a consequence of which we will see investment increasing, employment increasing, and all those spillovers. So you have the green economy, ESG related activities, the initiative that comes from that. And then there is, of course, digitization. We saw why digitization was very important during COVID.
Yes.
And I think we've learned great lessons from that, not just in Malaysia, but also globally. And with 5G rollout, improved connectivity, and how all of this is going to support automation, Internet of Things, etc., that will be another great area in which you can see growth. And don't forget, E&E. That's something we've nurtured the last 50 years, but I think there's going to be a greater spurt starting from the second half of this year, driven by generative AI and the kind of technology that needs to go with it. So you find that globally there's a push towards chips which are of the caliber of 5 nanometers.
I see.
And 5 and 2 nm. So there's going to be a lot of production of semiconductors of this calibration. It's happening. It's the big players, Samsung, Infineon, the companies in Taiwan, they have already gotten into it. And remember, we have this big hub in Penang.
Yes.
Which is...
I'm glad you mentioned that.
Yes, which I think features on the global map. So as this area picks speed, I think it's definitely going to see its spillover in Penang and therefore the rest of the country.
Oh, thank you very much, Doctor. All right, we're going to go for a little short break, and then when we come back, we'll talk more and delve into this in just a bit. So stick around.
Program Sejati Madani merupakan inisiatif baharu Kerajaan Madani bertujuan untuk merancangkan aktiviti ekonomi di peringkat komuniti. 5 sektor tumpuan yang telah ditetapkan iaitu pertanian dan makanan, jahitan dan kraftangan, harba dan kesihatan, pelancongan dan hospitality, serta aktiviti hijau dan kitar semula. Pemohon yang layak boleh membuat permohonan secara dalam talian dengan melayari pautan sistem sejatimadani.icu.gov.my. Sejati Madani merancangkan ekonomi komuniti.
Welcome back. We're talking about Malaysia's economy right now, and today in the studio we have Dr. Nambia. And I'd like to ask you, Doctor, with regards to this earlier, with regards to subsidy rationalisation, would it support and sustain our economy expansion, Doctor? What do you think?
I think subsidy rationalisation is a terribly important move. There might be some downsides to it, but it's something that is almost inescapable. And I think the sooner it's done, the better. And I think given our fiscal conditions, now is as good a time as any. So my quick answer to that is it's something that we cannot get away from. It's absolutely essential that we get into it. It would probably be a good thing if we could have a well thought out plan which probably could be shared, and if there were enough time to get buy-in from the different stakeholders, that would be an ideal situation. But having said that, I think that there are some reasons that sometimes why the ideal situation, why we can't pursue the ideal situation. I think there would be fear that if it were discussed well in advance, that there might be opportunism rearing its head. There might be people who would want to take advantage, stockpile. They would know the timing, etc. So I think these practical issues might stand in the way of what would be the best way of doing things. So I think here you have to be careful on how you handle the best with the second best, or what is the most pragmatic way of doing it.
Exactly, Doctor.
But that being said, I think you might have first order sort of negative effects. In the sense, you might find that the implementation doesn't go as smoothly as you might have wanted it to be, might have wanted it to have gone. It's also possible that there might be rent seekers, people who want to take advantage of this of the situation and raise prices. And I think this is something that we could expect, and something that has to be taken in a stride, and perhaps there have to be mitigating factors that have to be put in place to make sure that there is a cap to it.
Just let me get this straight, Doctor. You're saying that the authorities need to take action towards these people who are, misusing this subsidized rationalization concept, because they're taking advantage of the people. Absolutely. So it's the people's job, or I would say their duty, to actually inform the authorities of these people's action, raising the prices and particularly using the economy to their advantage. Is that what you're trying to say?
Yes, and I think there has to be adequate, there has to be good monitoring. There are some instances where a price increase is rational. I mean, when the price of, let's say, oil goes up, petrol goes up, you would expect certain sectors to be affected. But again, you have to make sure that the degree to which you are you have to face a price increase is proportionate to the increase in the price of petrol, or how it affects you, oil, or how it affects you.
Now, Doctor, are there any potential risks or downside factors that could derail or slow down Malaysia's growth trajectory, aside from what you just mentioned with regards to people taking advantage of these subsidies?
On a broader scale, of course, there is, we live in a fairly volatile world, especially these days. So you have geopolitical risks. That could be a factor. You could, for instance, find we're very trade dependent, so we could find that the economy in, for instance, the U.S. is not doing as well as the U.S. government would like it to be doing. Same for China. But I mean, as it's going now, it's not too bad. I mean, I think China is doing better than was expected. Growth rates are expected to be something like 5%. The property collapse didn't happen. China is consolidating. It's doing reasonably well. But of course, you're asking for the downside risks. So you have to contend with the question, what if China doesn't do well?
What if our business partner, or does not do well? How do we actually bounce back from that, or probably help our neighboring countries as well? Is that it?
Exactly.
Yeah. Now, what are the implications of Malaysia's growth on employment, income levels, and also standard of living population?
I'm very positive on employment. The labor market looks to be vibrant. It seems to be doing pretty well. I think we almost at the full employment point. I mean, unemployment is something like 3.3%. I don't think we can expect it to be any better. There seem to be a lot of vacancies, which I think is also
a good sign.
A good sign, yeah, that we have a robust labor market. There is, however, a negative, and that is our wages are not going as high as we would like them to go. It almost looks as if we are working within a suppressed wage model. I mean, so that's the negative bit to what's going on in the labor market.
So what do we do with that, Doctor? In your opinion, how do we actually solve that issue? Because like what you said, we have lots of vacancies, which is a good sign that our economy is growing. And we are already training our younger generation, those who've just finished their education. They're already straight into digitalization. They go into the sector whereby manufacturing requires their expertise in terms of digitalization as well. But when it comes to labor wages, Doctor, like what you said, how do we actually, in your opinion, make it at least on par with international levels as well, a standard?
I think that there are two things that we need to look at. One is the minimum wage. Our minimum wage perhaps is in need of revision. It's not a wage that would encourage technology adoption. With a minimum wage as low as it is, it still encourages you to hire cheap migrant labor. So it acts as an obstacle to technology adoption, as a consequence of which companies, especially the SMEs, are not looking at the long term. They're not looking at a longer time horizon. They're not, for instance, looking at technology adoption, technology upgrading, automation, the need for research and development. So I think one area that we'd have to look at is the minimum wage.
Minimum wage, sure.
The other thing that we need to look at is what can be done to increase productivity, and what can be done to incentivize productivity.
Okay. Thank you very much, Doctor, for that. We are going to go for a little short break, and then we'll be right back with a good doctor with regards to Malaysia's economy, so stick around.
Anak-anak di bawah umur 13 tahun tidak dibenarkan memiliki akaun TikTok, akaun Facebook, akaun Instagram dan mana-mana akaun media sosial yang lain.
Thank you for staying with us. Welcome back to Dr. Nambia once again. How is Malaysia's position in global trade, do you think, with regards to this, and investment flows, for that matter, expect to change given its strong economic performance?
I think on trade, we've seen very positive developments since the start of the year. Our trade, our exports have been doing very well. If you wanted to find a spot that you that you might want to hold out or be critical about, it would be imports. But my response to that would be, you need those imports. Imports are critical because you need those imports, the imports of intermediate goods, of raw material, etc., technology, in order to make the exports possible. So I think there's no escaping the imports. What we could do, however, is to narrow the gap. And I think the global trade environment, it's not the best possible environment, but I think it's still positive. I mean, I think IMF, World Trade Organization have put global trade at, I think, growing something like 3.3%. And I think that's a respectable number, which would do well for us. As I mentioned earlier, we have a very vibrant electronics sector to look out for. There's likely to be an upswing as far as the semiconductor industry is concerned, and I think that's going to do very well for us. Same with services. There's going to, I'm quite sure, be a lot of trade in services, and also palm oil related products. The price of palm oil is going up because of shortfalls in production. So that again is going to be conducive for us. We're going to be beneficiaries of the higher price in palm oil. So on the trade side, I'm fairly optimistic.
Optimistic about the trade, yeah?
And coming to investment, I think a lot has been done by MITI, Martrade, etc. By MITI, especially MIDA, there's been a lot to encourage investment into the country. I think the approved FDIs have been very respectable, and there has been an expansion of capacity by many of these semiconductor industries. And we also find that there are new industries that are coming into the country that are seeking out Malaysia as a center for, as an investment hub. Cloud computing, data centers, etc.
Yes.
So I think you'll find that Malaysia is increasingly going to become a hub, a center for all these cutting-edge technologies.
Which is a good sign as well for Malaysia.
Yes.
Doctor, what challenges or bottlenecks, if you don't mind, if any, need to be addressed to fully capitalize on Malaysia's growth potential before we let you go, Doctor?
I think looked at from the short-term point of view, the next couple of months, I think what is perhaps most important is to try to improve what can be done to make things easy for business. And that's, I think, a constant chorus that you'd get from manufacturers.
I see.
You need to bring down the cost of doing business. It needs a more conducive environment, more business-friendly environment, less bureaucracy, etc.
I see.
Looking at it from a slightly longer perspective, and I think that pertains mostly or a lot to FDI. You have to make sure that we have the talent, the training, the infrastructure, so that the approved investments get converted into realized investments.
Thank you very much, Doctor. Now, that's all the time that we have for On the Table this evening. We've been talking to economist Dr. Shankara Nampia on Malaysia's projected economic growth of 5.8% in the second quarter of the year. Now, a repeat of this episode broadcast can be viewed again at the same time tomorrow and subsequent days on both RTM Click and MyTV's Berita RTM channel, which is also live streaming on YouTube. Till next Thursday, we'll delve on another topic of interest, so stick around for that. I'm Otto Othman signing off.